Ladies and gentlemen, K-Kim here. Welcome to the market update for this weekend. Hope you guys had a good day trading today. Market is up about 1% there on the S&P. We did see the transport and the banks and the small caps surge today. And I think that's something that we've been talking about this week, and I've also emphasized it yesterday that we would need the banks and the small caps and also the transports to participate, because I mean pretty much all throughout this week we saw the NASDAQ moving higher, and we really didn't see the other sectors such as small caps and the banks and the transport not participating. But today we definitely saw the banks participating. You can see these bank stocks are up about 5-4% there, 6%, 5%, and that's what made the market to close the day strongly, right? It's been kind of pretty lethargic throughout this entire week. And I really think even last week when we did see S&P making a move here, that was a last week move, that was all fueled by the large tech stocks, right? And you saw the banks, you saw the small caps, you saw the transport just kind of lagging behind. But today we definitely saw them waking up. We would need to see going into next week. Obviously, we know that one day move does not establish a trend. So we will need to see a follow through going into next week. So tonight in this video, we are going to try to figure out, is this market preparing for another leg run higher, right? Or are we kind of getting into that overbought territory? And is this market gonna get into a decline or pullback? Or are we going to see some sort of a lethargic move continuing throughout next week because of the tech sector? NASDAQ is pretty extended, right? So we're gonna answer that question in this video. Also, I'm going to cover Spider and the banks XLF today, but I depicted these stocks here. Those are the stocks that I currently own, some of my stocks that I currently own. So I want to analyze those. Obviously, we'll end the day with gold analysis and Bitcoin, right? So it's all coming up right now. So let's kind of flip back to 65-minute chart first and follow up from what we were talking about yesterday, right? So I think it was pretty straightforward today. As you can see here, this is how the market closed yesterday, right? And it looks like we gapped down slightly. So this is where it closed. That's where it opened, right? And then we slightly gapped down. Looks like after the gap down, the market's starting to fall, and you can see where we found support. This is a level that you can see that was a level of pivot. And also my short-term moving average, you see that my squiggly line there, that was acting as support throughout the early July, and then last week we saw that abrupt sell. It wasn't last week. It was just because I thought we're looking at daily chart, but we're actually looking at 65-minute chart. So this is all happened this week. This is all this week's price section right here, because we're looking at hourly 65-minute chart here. So this was just pretty much yesterday, right? So this was yesterday. This was Wednesday, right? We saw that Wednesday run towards the end of the day, last hour. And then Thursday, we gapped up, faded it, came all the way back down. We also talked about yesterday why we found that support, because there's a gap there. The gap level got filled, right? And this is a level that we've been talking about pretty much throughout this entire week, right? If the bears just bring it down, they're going to be met with many support areas, and the buyer is going to step up when these gaps get filled. So that's kind of what happened here, which we talked about yesterday. Gap got filled. That one got filled first, and then we came all the way down to fill this bigger gap here, and both of those gap got filled. And then from that point on, we just rallied hard for 2 days straight. So, and today it looks like we gapped down, and then we saw the move, right? You see that long lower way. I want to make sure. Let's go to the cash market real quick. I just want to make sure. I wasn't watching this morning. So, yeah, so it looks like we did see, this is S&P 500 index itself, not Spider ETF. So it looks like we did see that selling pressure the first hour. Let's go back to the Spider. So we did see that first hour, selling pressure. And this is the thing that we talked about yesterday, that momentum was to the upside, right? And for the fact that the price were staying above my short-term moving average. And we did see that short-term moving average did acting as support at least a couple hours there yesterday. And it came back to retest it one more time. Buyers showed up one more time. Some dip buying activities there. And then a second hour, third hour, fourth hour, fifth hour, and last hour. Pretty much all throughout the day. So there's a little bit of shenanigan in the first hour. But as soon as that level was protected near that short-term moving average, that was it. That was it, right after that, this market did not slow down. It continued to run. But why now, right? Why does this happen now? I mean, it was such a lethargic, up and down shenanigan, gap ups, gap downs. Like there's a gap up here, and then gap downs here, and then we continued lower. We saw gap up. We've got flush to the downside. We saw the ramp. We saw gap up, and then it got faded to the downside. So I mean, it was hectic, wasn't it? Like it was hectic pretty much all throughout the first portion of this week, right? Until what? Until Wednesday. What changed after the Wednesday? Right here. We covered this yesterday, right? My yesterday's video was called "Something is Brewing." This is what happened, right? Instead of my oscillator coming all the way back down to the oversold level, we stopped short in the middle, right? We've cultivated higher lows on my oscillator. And after yesterday's price action, which we noted yesterday, right, on the video yesterday, this was yesterday, we talked about right there, we went back all the way back to the March lows every single time. I mean every single time. Every single time when you see a full cross on my oscillator, every single time we did see a follow through next day. We talked about that yesterday, right? This means we had a very, very high probability that market was going to continue higher. Market was going to see a follow through, because we have not seen any follow through. And to answer my question that I was asking, why now? What about before? Why was it so choppy? So, you know what I mean? Like, why was it there's all up and down shenanigans? Why was it all sideways? It was a very hectic environment, throughout early stage of this week and some last week. Well, that was when the buyers got tired. You see that buyers made a move there. That was that move, right? That was a last week's move. Last week, we saw that move after the throwing that bullish divergence. And then we got into the where? Overbought condition, meaning buyers are getting tired. On top of that, we threw bearish divergence, right? And this is, we're just recapping everything. We cover all this throughout this entire week. And I've given you the fact that we're going to get into a hectic environment. Because of this bearish divergence. So then the whole time, things got choppy, things got, short term of things got a little bit ugly. There's a lot of whipsawing action. There's some gap up, gap down, gap up, flush. I mean, you know what I mean? There's a lot of up and down shenanigans, and market really didn't go anywhere. Pretty much moved sideways. And then after that, we finally saw the oscillator rolling over, right? And we weren't sure at the time if the oscillator is going to come all the way back down to the oversold level, or we're going to find support there. And yesterday, it was yesterday, right? Thursday, this was Thursday close. That's when we saw full cross, right? We labeled that as that's a full cross. You can see that the oscillator, they're separating. It's something like this, something like that, something like here, right? And then that was the first hour, right? We can see that on the first. So we talked about yesterday, if you see the market holding up first hour or two, this is going to continue higher, right? And then a second hour, right? That was a second hour. And you can see that my oscillator continues to separate and continues to move higher with a little bit of blip because of the little fluctuation on the first hour. But there was that momentum there. So once that gets, once that oscillator gets opened up, once that oscillator gets fully crossed, especially in the long to mid-term uptrend, right? It's a little bit different story when you're dealing with the downtrend, but we're not dealing with the downtrend, right? We've been in a longer-term uptrend. So you're dealing with the longer-term uptrend. Also, we talked about last week, there was some bullish momentum here already, and then the oscillator came down, and then we saw a cross. We talked about how, when the price made a higher high, a lot of times it does that, and the market pulls back for what? To cultivate higher low. This is everything we talked about this entire week and last week, right? And then all throughout the day, you can see it didn't slow down. It was much smoother, you see. So if we just look at this, just look at this move, look at that move, smooth, right? This move was smooth. This move is smooth, right? It's starting to get a little bit hectic here. Why? Because bulls are pushing, right? But it was getting into overbought level. We are getting into that overbought level, meaning, bulls are kind of tired. This move right here doesn't seem like a lot of shenanigans. Why? Well, bulls are not tired. They just throw through that bullish divergence. Same thing here. We made a higher low and we're making a move. Bulls are not tired. So there's smooth move here. But now here, why things got hectic right there. Well, we understood the fact that we've been navigating this market together every single day this week, we were dealing with a negative divergence, bearish divergence. So things got choppier, things got difficult, right? But once we realized that there was a higher low cultivation happening on my oscillator, we came to realization that market is preparing to get into second and third and fourth gear. Right, that happened before back in mid-May to June. We talked about that yesterday, right? The performance from here to here, right? We were at 277 and all the way to 320, right? That was about 20% move in 3 weeks. That's when my oscillators start cultivating higher lows. Now we have another higher low. And on top of that, you can see that we have cleared above. We're poking his head up, right? As of now, poking his head up. We got the slow line still underneath it, but that's the initial signal. That's the initial confirmation that this resistance, the oscillator is probably going to ignore the resistance and continue higher, right? We've seen that happen before. Like here, you can see that it just thrust above it. Even here, just kind of went above it. So it looks like price is going to continue. Only thing right now is, and do you guys remember we talked about this last couple weeks, right? Bulls brought it up. Remember there was a big gap down, right? This entire thing was an island, right? It is no longer an island. I explained that a couple days ago. And we filled the initial gap, like half of it here. This was back in mid-June. And then on this day, early July, July 6th, we came up and filled a little bit more. So each time we get higher and a little bit higher, and we're back at this level. So this is a really, really important level. Let's first of all, so you can see, just looking at the moving averages, first of all, you can see my short-term moving average is now rising. My mid-term moving average is rising. My long-term moving average is also rising. We're bullish. I have to say at this point, we're bullish in all terms. Bullish in the short term, bullish in the mid-term, bullish in the long term. Because as of today, as of now, at this moment, things can change very, very quickly early Monday morning. But as of now, as of this moment, we still have this gap remains open. So I'm going to actually still give it neutral to bullish, right? Not fully bullish yet in the short term. Definitely short, mid-term bullish. And then a long-term bullish. And also we talked about the fact that last time when this thing got up here, what did we talk about? We talked about we have a subtle higher high. And when we have a higher high, market tends to come back down to establish higher low. We didn't have a higher low. This thing just pretty much went straight up. That's a decent sized higher low. It got back near my midterm moving average. A lot of times that's when trend gets developed, that's what it does. It goes up, kind of, retests a midterm moving average. And then when the stock gets into second and third gear, instead of coming all the way down to, retest a midterm, it would go up and then it retests a midterm and it continues higher. And when it pulls back, it doesn't come back as low and it starts to just retest my short-term moving average. We saw that happening right here back in June, mid-May to June. You can see it got lower than my midterm moving average. There was a gap area here, and then we saw that steep, sizable higher low there. And then it got up, right? And then it didn't come down as low. We come down to retest what? My short-term moving average, 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 right? If you're a short-term trader, just understanding the momentum, just understanding the sentiment, you could have bought those dips every single time and, ride it higher. I actually think that, in an uptrend, you never want to short. You want to wait to buy the dip. You'll make more money by doing that versus you trying to call the top. This most difficult endeavor is trying to call top in an uptrend. It's easier to call top when things are in a downtrend. In a big picture downtrend, it's easier to call top in a downtrend. It's easier to call bottom in an uptrend. Do you understand? So it's easier to buy the dip versus trying to short, right? You can see in a good uptrend, you could have capitalized from this every single time, right? You know what I mean? Anyway, so best case scenario for the buyers is gapping up. It's no coincidence. It is no accident. We just got to right at that level, that gap area where we were back in, July 6th, right? Market is going to make sure you kind of guess, well, are we going to fill this gap? Are we going to pull back from here? Because that's a resistance. That gap area is definitely a resistance, right? So best case scenario for the buyers, buyers are not tired. They got room to move here, right? Definitely got room to move here, and we're on an uptrend. Is just gapping it up. And just gapping it up from here, 317, that's a 0.4% gap up. It's very, very much doable. This is such a small gap though now that if we gap up, this will turn into a island reversal, but because of the gap size, such a small gap, this gap right here, that down gap, it's such a small gap, I couldn't say like, okay, the entire thing is now island bottom. I can't say that. It would have been better when we are like down here, right? When I said that right here, this was when 314 and the gap was this big. We talked about that. If this thing gaps over it, this entire thing is going to become an island bottom. Remember we talked about that back in what? July 2nd, right? July 2nd video, I talked about that. Market did see a gap up next day, but it just wasn't enough. You can see that it didn't gap up to 318. It kind of gapped up to like 316. It wasn't enough and did not fill the gap entirety of it. And then we saw that pullback, which we've kind of talked about. The gap is not fully filled. Things going to get hectic, right? So now we got the little gap. So if we go fill it, it's fine. It's a small gap. We're probably going to act as a little resistance, maybe pull back a little bit and come down and retest prior resistance as a new support before going higher. So I don't think at this point, this is not a huge threat, but regardless, buyers, you know what I mean? Buyers don't want to take any chances from it. It's this gap is starting to get really weak at this point. It was big threat to the buyers when this thing truly was a big, you know, island top gap, which we've been talking about, right? And from then things got hectic for an entire month, as you can see. Now this gap is weak, but bulls don't want to take any chances. Don't want to just play around. Probably best just go up and fill it real quick, get rid of that selling pressure, pull back, retest prior resistance as a new support, and then go after this little gap too. I believe that that's what's going to happen. Best if buyers just gap it up and then go after this gap at 323. At this point, all the momentum is on the bullish side. There is no weapon that bears can try and play here. Only thing will be some kind of shenanigan like gap down or shenanigan sell off. But that scenario is gonna be rare, right? That scenario is gonna be rare. They had their shenanigan moments right here when the bearish divergence was formed. Now you see we got a lot of momentum here. Bulls are not tired. Bulls got still room to move, as you can see. And bulls cultivated higher low. On top of that, we're just getting up, but we didn't see any kind of slowdown on this resistance. It looks like we're gonna break above it. Looks like it's gonna break above it. You can see when there was this resistance there, we just broke above it. And so I think going into next week, at least first couple days, we will see a bullish price action on Monday and Tuesday, I believe. And so there's a little, so now we'll flip back to daily chart here. Looking at the daily chart, you guys remember back in at 300, I've been emphasizing the fact that we have two rising pivots, right? We got the gap area that wasn't filled. Not only that, my longer term moving averages all clustering in this vicinity. You guys remember me talking about that, and we definitely found some strong support there, right? That was just 2 weeks ago. 2 weekends ago, we talked about that. Strong support there. We made a move. We saw a little pullback, and guess what? That, you know, my short-term moving average on a daily chart now, right? My short-term moving average on my daily chart, which is mid-term moving average on a 65-minute chart. So my short-term moving average on a daily chart, we saw that lower wick, got it right back up. And looks like buyers are preparing to move higher. Looks like this was a consolidation. And these kind of consolidation is a good thing. This is how buyers operate. They make a move, they consolidate before finally moving higher, right? So best bet will be obviously gapping up. And next level of area, I think the next leg run higher, which also we talked about, you know, these sideways move, right? And this is what you call consolidation, right? And that often happens in an uptrend. We see an uptrend, right? And then the price moves sideways, and then we see another leg run higher. And then it pulls back, buyers absorb volatility, right? And that's where there's a lot of up and down shenanigans, move sideways, for the next leg run higher. I think next leg run higher would be targeting about 333 to 340 all-time highs. And I think that's what bulls are looking for here, the next leg run higher. So I think everything is setting up for that. Everything is setting up for that. As far as the current market sentiment, technical sentiment is concerned, the trend, just even today's market price action, just everything is setting up for the move that could result in the S&P going after filling this gap right here. We'll see some troubles in that at that time. That gap is going to give some trouble. So we'll have to reassess the situation. We have to reinvestigate, right? When the price get there, that big gap here. And that's the one last gap down. We got this little tiny one. That's not a big problem. This is a decent sized gap. That's the only down gap the bears have left. You see how there are a lot of gap downs that happened in March. That was all filled. Bulls opened up this gap, this gap, this gap, this gap, this gap, and they are all still open. Bears, we only got one decent sized gap left, and they're starting to lose a lot of its momentum, and bulls are continuing to strengthen their territory here. And one last weapon the bears got is this gap area, and I think bulls gonna try to go up there and fill it. So at this point, to answer the question that I was asking in the intro of this video, is this market gonna go higher for the next leg run higher, or are we gonna see some kind of a pullback or decline, or is this market gonna just be more choppy, grindy going into the next couple of weeks? Well, definitely Nasdaq is extended, but we have something that I've been talking about in the last couple of weeks is that there will be money rotation that may occur. So what's going to happen is a lot of these funds, they're going to take some profits from the large tech stocks, and they're going to rotate that into more small caps and transports and the bank stocks. So what we could see is that you could see Nasdaq kind of lagging. Nasdaq don't have to completely sell off. That's the thing about it, is Nasdaq don't have to sell off completely or see some bloody red days. It could see, Nasdaq could see some red days, but could consolidate. Like, remember we talked about how just even here, right? The price can these indices, they can correct through time. Like that. There will be some up and down moves, but it corrects through time. There will be plenty of time for the Nasdaq to do something like this for months or 2 months or something like that. Just up and down, sideways move on the Nasdaq, and then while the banks and the small caps and transports, these lagging sectors to catch up, right? And I think we saw a little bit of preview of that. We got 1% on S&P, we got the 3.5% of the banks. You can see banks has not been participating there with the recent move. S&P is getting, you can see S&P as far as the price is concerned, S&P is getting near that, that early June highs. Where are the banks? Well, banks are nowhere near the June highs. It's still down here. So let me do a little bit of maintenance here real quick. All right. Let's get rid of that. Let's do a little maintenance. So, okay, so you can see that this gap still remains open. That's a good sign, right? That's a good sign for the buyers. Buyers made sure to protect that gap. This gap's still open. Remember last time on Spider? Remember when the Spider was at 300 area? What did we talk about? We talked about how this gap, 297 and 295 gap, that gap continues to remain open. Remember we talked about that, and then from then you can see we saw that bullish run where the banks. So we see that there's a gap here that's still open, and we saw that that's what kind of candlestick is that? That's a strong bullish. It's like mixture of engulfing and tweezer bottom and one white soldier all together. It would have been one white soldier if it would have been gapped up and then this, but we didn't. It have a flat bottom, so that's a tweezer bottom characteristics, but a lot of times the tweezer bottoms have a same top, like it wouldn't poke out like that. Well, it would have been engulfing if this thing would have came down lower, if it would have gapped down and then a made, it would have been engulfing. So it's like none of those. So it's a part engulfing, part tweezer bottom, and part one white soldier. Definitely we got pretty decent base here. We got nice base here. I'm actually wondering, let's go to 65 minute real quick. This is 65 minute on XLF. You know what I'm gonna do? Hold on a second. You know what I'm gonna do? I'm gonna bring out my other indicator because I think there's a bullish divergence there. Not on this oscillator. I got other oscillator here real quick. This one's a little bit different. So here, let's get rid of that. You can see definitely, okay, so that definitely we got a bullish divergence here, my other oscillator. You can see that that's a lower low and then another lower low, right? This low is low, so this low is lower than this low, and that low is lower than this low. So we got the low, lower low, and a lower low. Well, my oscillator is cultivating higher low there. That's what I like to say. Three valleys bullish divergence occurring on bank sector right here, XLF. Right? So that's a bullish signal that needs to be confirmed with the price, right? There could be many signals that never confirms though. So we need to see a follow through. So I think right now at this point, I think there's also, there you go. So we got that. So we hit that bullish uptrend support, and you know the banks, and I'm kind of, you can see that these gaps are still open, and that's the island bottom gap right here. So bulls are still working with something, though. If you look at banks, you're like, well, banks are really weak, all that, but these gaps are still open. How many gaps is that? 1, 2, 3, 4 gaps. So buyers are working with something here. And definitely held this level. We got the double bottom with that bullish divergence on the 65 minute chart there today I just shown you earlier. And we got the rising uptrend support holding as of today, right? While it is staying up above the gap area. Buyers protected this gap area today, or this entire week and last week. I mean, this thing really did come down. Boom, 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 right? But the gap remains open. I think that's kind of an island reversal. It is. It's actually an island reversal gap. Here, I'm going to turn that into green. Think about it. It's partially, but you can see there's a gap down. And the gap down area doesn't end to here. That means it's that it's partially island gap, partially, because there's a gap down. That's still open, so I can, okay, if you want to be exact, I can do this like that. I can make it, I can do this. So you can see that partially island gap, regular gap. That's a pretty strong signal. That's a pretty strong gap area, and buyers made sure to protect this gap last couple weeks. And with that bullish engulfing / tweezer bottom / one white soldier candle, any candles, it needs to see a follow through at least day or two. And we still have higher lows, don't we not? That low is higher than this low. This low is higher than this low. And we got the higher high in the midterm. Definitely in the short term, we got a lot of selling pressure there. So I think the banks really need to lead next week, early next week, for the S&P and other sectors to really thrive. Bank stocks. So I would watch bank stocks, how they do early next week. And obviously I'll come back on Monday and watch the market with you guys. But looks like this could be a good start. If we see a follow through, end the day. If we see a follow through on Monday and end the day pretty strongly, I think there could be some rallies that may come about on the bank sector. Let's go to some of my positions here. I'm still holding, so I've been accumulating Apple in this vicinity here. and I've closed out 1/3 up here, and I'm still holding 2/3 of the remaining. I thought about closing a little bit, but you know, I'm just thinking if we see any kind of pullback, I just want to accumulate more. So I'm still holding 2/3 of it. So let's see. You know, I want to show you something real quick on the daily. You see this daily chart. You see that how it just capped us. This is what happens on a daily chart, right? You don't see this in a 65-minute chart, but on the daily, it already hit the overbought here, and we just kept doing this squiggly thing on top of it, and then this thing continues higher. So we want to continue to give benefit of the doubt to the buyers. I don't know where the top is. You don't know where the top is. None of us know where the top is. If anybody's saying this is the top, well, they said this was top. They said this was top. They said this was top. This, you know what I'm saying? This is why you don't ever want to short the rising stock, right? You can't squeeze anything out of this. It would have been better to buy these dips. At least you got more room to move to the upside. So no, we don't want to call tops. I wouldn't even, this is not a level where you're going to short, unless you just want to keep gambling away. And this is not level I'm not going to be accumulating any longs up here either. If this thing continues higher, I'll think about closing out a little bit more of my position. This is a level where you just want to hold what you currently have. If you've been long before, somewhere this vicinity, and then keep riding it. And if it continues higher, then you continue to close a little bit out. So you want to give benefit of the doubt to the buyers, right? Continually. And please kill that urge to short, because that's you just trying to call top, and you know, you think that, well, it's been up so much, they must come down. No. We may come down, we may get back up, we may see some, you know, the market could, you know, Apple could do another consolidation, right? It can correct through time. Let's go to Google. I'm actually holding Google in full. I have not closed any of my Google position. I've been a long-term investor on Google since actually back in these levels here. And then I bought more here recently, just a little bit more. I accumulated a little bit more there, and I have not closed out any of my positions on Google yet, because I believe that Apple has not been in a real uptrend, Google has not been in a real uptrend. You can see we got some of these consolidation. We had some here. We made a move, but with the COVID-19, we saw another pullback, but we really haven't gone into a real bullish run. And Apple, I keep saying Apple, Google likes to, because you see a prolonged consolidations like this. This was obviously back in 2008, right? That was a big crash, but you can see right here, right? You can see right here, maybe some here. So as a long-term investor, how you really invest in these companies is you buy these levels and you accumulate, and then you ride these moves. And that's how you practice compound growth. And then maybe you can close out some when it gets up somewhere in this vicinity, and then when it pulls out, you start accumulating again. And the stock may not go anywhere for a while, and that's what it means to be a long-term investor, right? And then you start riding it again. So we're kind of at that juncture again. I believe that we saw some up and down shenanigans, but I think this entire thing, kind of a consolidation, it's weird. It's looking pretty ugly because of that COVID-19 plunge. But I am still holding full. I have not closed out any of my position, holding shares on Google yet, and we're just taking out this all-time high level there. And I think maybe I'll start to thinking about closing it out once we, do that. Maybe close out some, add more, something like that. So same logic applies on Google, right? And I think this was such a buyable dip right here, because when I go to daily, you can see it got into that just like how Apple did. And then it came to this level. See right there? Some of these level. and we found support, little double bottom there, slightly bullish divergence too, like that, like higher low, lower low. Look, see that my midterm moving average, if it's, you know, in that vicinity, got up there, and that's the level. You can see how that moving average crossed right there, and that was a great level to accumulate. And then we came back to that level, and this was when you can see how my short-term, both of my short-term moving averages crossing, and my long-term and my mid-term moving averages crossing there now. After that, why is my daily chart looks a little bit different? Yeah, a little bit different. Let me see, hold on a second here. Oh, they're same. So let's continue here. Let's go to Netflix. So Netflix is something that I actually accumulated here and here, like literally actually near the lows there. And I held it. I closed 1/3 here. I think I mentioned it on the couple weeks ago or something like that. So this is where it entered. I bought more here. I did not close out any, and I held it. Closed out 1/3 here, and I closed out another 1/3. Not like 1/3, 1/3, and then I got 1/3 remaining. So basically, I closed out 1/3 here. And then whatever I was holding after I close out 1/3 here, from the remainder, I close out 1/3. You know what I'm talking about? Not that like I close out 1/3, so now I only have a 1/3 left, but I got a little bit more than that. So that's how you become a long-term investor. You get into, because basically you want to wait until, you know, instead of chasing stocks, man, flying stocks, what you do is you gotta be disciplined in your approach. Buy these levels when these stocks get into, you know, bargain, right? And then you ride it, and then when they start breaking out, that's when you start closing out a little bit instead of chasing, right? Instead of like, oh my God, Spotify's flying, I want to go long. Oh my God, Netflix is flying, I want to go long here. Instead of that, if you're long on Spotify before the breakout, that's how you do it, right? And then when these guys break out, you start closing them out some there. Let's go to Qualcomm. Let's get rid of some of those lines here. So same with Qualcomm. So I've been faithfully accumulating shares here. I bought some here, and I bought some here. Here. So I started buying at 51. I bought at 65. I bought more at 69. Never once closed out any of those shares. And I'm still holding long. I'm still holding full. I have not closed out any. So when you go to monthly here, that's a monthly. And you can see there was, let's put a box here. Hold on a second. I want to get rid of something. It's kind of messy. Let's get rid of that. Okay, so this is a monthly, and you can see we saw that consolidation. It's ugly. It's not pretty. So you can see that there's a consolidation there, right? So there was that consolidation, and there's that base. So pretty much I was accumulating this vicinity right here. So I was accumulating when the stock wasn't going anywhere. And then when they start to move, you ride it, right? So I wasn't trading in 2009. I wasn't investing in Qualcomm in 2009 and 2010, right? But if I was gonna play it, I would have bought it somewhere here, and add more here, something like that. It came down, prior resistance, new support, and then ride it, and then start closing them out some, right? So, and now you can see I had to go through these up and down. So and then as this thing starts to move, you know, you kind of let it ride. And right now, Qualcomm is just right on that, you know, it hasn't broken out yet, right? Right on that level. I think we're kind of getting into the overbought territory on this move here, right? So we may see some pullback, or, you know, that's the thing. Once the stock is moving like this, you think, wow, that's pretty extended, okay? Well, look at Netflix. Look at Netflix, you know, we got to this level, right? Overall level. What did Netflix do? It corrected through time. Remember that? This is what I'm talking about with Apple, with Amazon, with Microsoft, with all these different stuff. It can correct through time. You see, we didn't see a big decline. This is the reason why when it got up here at like 443, I only closed out 1/3 on Netflix, and my buy point was actually 375 right here when it, you know, like 384. This was my buying point. it didn't get there. I was waiting to buy that, but I just, you know what I mean? It didn't quite get there. Good thing that I didn't close out everything. But you can see we corrected through time. That barely corrected. And a lot of people thought that, well, Netflix is up a lot. And then it's up even more in just last week, right? Same with Qualcomm, right? You say, well, that's a V-shaped higher. Gotta correct. Maybe we'll correct. Maybe they'll give me more buying opportunity before we do that. You see what I mean? Instead of trying to short that, because you're trying to short here. What if it pushes even higher and then and then sideways and then continues higher, right? So you never, when the stock is just rising, you never know where the top is. Sometimes they can get overbought and keep staying overbought level. Square. So Square, I got into it here when the moving averages crossed, and I've been covering Square time to time with you guys right there when moving average crossed, right? And you can see some of these levels. And then when you broke out, I closed out 1/3 here. And then this week, I forgot when, Tuesday or Wednesday or something like that, I closed out another 1/3, I think, and going long from here. So, I mean, that's just buying shares. And that's about 140% move, So that's what I mean is that you get in when nobody wants it. Like, everybody's scared, right? And obviously you have to take a risk. And something I always say is the market rewards the risk takers and punishes the chasers. Anybody who's been trying to short it, think about, same with the SQ, like when it got up here, people thought, yeah, no way. When it got up here, people like, yeah, that's a strong resistance, man. That's a strong resistance. How many people do you think they're trying to short that, thinking another of that coming? Right? So when you see how, if Square is here, you're like, I don't know, man. That looks like a strong resistance, right? And remember, I was long here. I did not close on any that level. I was actually looking for a breakout. And look where it is at. So with the same concept, when you look at Qualcomm, we're here, but how do you know we're gonna see a pullback? How do you know this thing is gonna start tanking, coming back down? What if this thing does what Square does? I don't know. You see what I'm saying? But I'm gonna give it a benefit of the doubt, and that's how you become more of a long-term investor. You can even, you can become a position trader. That was more of a position trading because, the way I traded my Google, my Apple, right, and my Netflix, those are definitely long-term investing. But the way I traded with Square, because I got long here and I started closing out here and here, right? I'm still holding some, but I've been closing them out, taking profits there. That was more of a position trading, right? You got in about April, and I'm closing out so my position trading I hold about 3 to 6 months or so. I play options also, but in this case I actually just played shares. I didn't play options on this one, just because I thought it was a little bit more riskier. Because I don't know how long it's going to take before this thing actually makes a move. With shares, I can hold. With options, it's limited because there's an expiration date. So with options, I like to play it when it's in a full-blown, fully in a primary term uptrend. And then when I see a stock, or index in an uptrend, it pulls back, and I like to buy call options there. But when I was buying Square, this was back in here, it's tough for me to buy options because I'm not sure if we're gonna start consolidating here for days or months. Like you see some of these bank stocks, right? You see Wells Fargo, Bank of America. That's what they did. They didn't see a move like that, like Square did, right? So that's why I didn't buy options, because I don't know how long this thing will start. Because I kind of felt like this was the bottom. Like this is I don't think it's gonna go any lower than 40. So I bought shares just in case we can just keep consolidating. So I have all, you know what I mean? Then I'm gonna continue to hold that, and then maybe I even accumulate more. But with that move, just in about 3 months, there was a nice gain there. Alibaba, so Alibaba, the way I played it with the Alibaba, obviously playing it like a long-term investor. So I was buying these levels here and here. I added it here too. So I added it there. So I did buy call options on Alibaba here and edited my shares, but I'm a long-term investor in Alibaba, and I also bought call options just this thing broke out. I covered this last week, didn't I? And we talked about on the monthly Look at that. So you see, so prior resistance, new support, prior resistance, new support, right? And you see that breakout. So you don't ever, so I talked about how why chase stocks are flying right now. Wouldn't it be better to look for stocks and setups that is, you know, where am I? That you know, it was right here. It was like this, you know, right here. That has a potentially for a move. So I'm still holding full shares. I have not closed out any. I started accumulating 130s, 150s. I bought more 172, and then I got in a little bit more, just a little bit more at 270. And then I bought some options. I did close out my options because there was short-term options, and I did buy out of the money. I didn't think it was going to go up that fast, that quick, because it's been kind of grinding for a while. I was actually looking for something like this, like taking days and months for this kind of move. But that thing moved just like this, but in days. So I closed out, because I'm also holding pretty decent size shares on BABA. I closed out all of my option calls with, there was a pretty big gain, so I just closed them out when this thing just got up there just a couple days ago. Twitter. So Twitter, I'm still long on Twitter, but I did unload quite a bit of my Twitter shares, I think up here. And I actually used that, I allocated funds to some elsewhere, some other equities, because I felt like Twitter was still kind of, it was a little bit more vulnerable, right? The reason why I thought that Twitter was vulnerable, first of all, we're still in a downtrend. And we really don't have an uptrend. And what got me a little bit more like cautious is because of this lower low. You see that? And these lower highs. I think if we didn't have that lower low, I would have been a little bit more still bullish. So I'm a little bit more cautious on Twitter. I still like it for long term. But for me to be more aggressive on Twitter, I still hold some shares on it. Decent size, not as big as before. Before. But I think there's this gap area here. We're just stalling a little bit. It needs to so you can see that's the high, prior high. It needs to either get it and make equal high, pull back and do that, or it gets up, pull back and do that, and it needs to start cultivating higher high and higher low. If we see something like that, I would accumulate more shares in that. Let's go to gold here real quick. Gold is continuing to kind of move higher to the upside. Looking at daily, we are kind of getting into that level where you can see we're kind of in that vicinity here. So that was here, this was here, but you see how those times corrected through time. Look at that, corrected. So we don't know. That's the thing. It may just correct through time. We are kind of an overbought area, but I want to continue to get benefit of the doubt. I am long on gold, GDX, and silver, and that was back in summer of 2019. I'm holding full there. I did close out a little bit on GDX, but holding full on gold, holding full on silver, but close out a little bit on GDX. Let's look at Bitcoin real quick. I do not have a position on Bitcoin. I've been kind of looking to potentially, but the reason why I'm not getting into it because we're still in a downtrend. We've been talking about this, and we talked about it yesterday or last week. We saw a little bump, but there's that gap was open. We got this down gap. We got two down gaps open now. It looks like this is gonna go down here and fill it. So I still don't want to go long. Even if this thing comes down to 840, I don't know. I could maybe go I don't want to go long. I will just be patient. I want to wait until this thing establishes an uptrend. We don't have an uptrend. You see what I mean? So that's why it's very difficult at this point. Once we start to see an uptrend, meaning this thing has to go up here and start doing this. We got to take out this high and make a higher high. And then we see a pullback and then start getting up. This is where I would like to go long, right? And you say, well, okay, if you go at $8 here, you get a little, yeah, but thing about it is it's more riskier because it gets up, hit that, pull back, and then what if this thing continues to the downside? See, I don't know, right? So that's why there's a little bit of danger in that, trying to go long in a downtrend stock or index or something like Bitcoin, unless there's some kind of major bottoming signal like weekly bullish divergence or something. We don't have anything. When I look at, yeah, we don't have anything. We have nothing. So I'll end the analysis here for today. Hope you guys find it useful in your analysis. But looks like we have all the momentum here, all the momentum that buyers have built in the last couple of weeks, and finally looks like it's breaking out of out of this level right here, holding up above it, and looks like the S&P is preparing to get to and fill this gap here, and there'll still be a battleground. This will be a battleground. So every time when the gap area comes, it always been a battleground. You see that there's this gap. There's a gap here because there's where it closed. Back in March, we gapped down here. And this is where it closed, we gapped down here. So every time, when there's a big, pretty decent sized gap area, you see what happened, right? So that's gonna be a battleground, I think, when we get to this gap area, unless we see some very fast bullish move and we see strong bullish run in like several days to just fill this up really fast. That will be the best case scenario for the buy. We start fizzling up here, somewhere up here, right? Let me actually look at daily chart oscillator real quick. So daily chart oscillator, we got a little bit more room to move, just a little bit. So by the time the price get up somewhere near here, we're gonna hit overbought level, overbought condition on the daily, and that's gonna make things. I think we're gonna get a little bit of hecticness in this gap area. It's gonna get choppier somewhere here. Again, unless bulls just go up fast, like something like this, and that's still possibility, which we talked about just today, right? What happened? Where happened to my? Let's bring that back. There you go. We talked about how bulls are suspicious here, man. They're doing something. So if they're preparing to get into the second and third, I think we already got into the second gear last couple days. So I think if they're getting into third and fourth and fifth gear, and we saw what the S&P did, if that's the case, if that's what buyers are doing, obviously we'll come back every day next week. We'll navigate this market together and we reinvestigate, reassess the situation. If that happens, we can get up here quickly. The best case scenario for the buyers, get up here quickly and fill these gaps, fill this gap quickly. We start stalling a little bit up here, things could get hectic, something like this. So we'll come back next week. We'll follow up, we'll reinvestigate, we'll navigate this market together. You guys enjoy your weekend, and good luck trading next week.